I want to welcome you here today to this talk on AI governance in the insurance industry. Now, you know me, but I'll still describe my background anyway. I have decades of experience, over 30 years in AI. So I've had heavy duty experience for a long time, especially to do with competitive intelligence and taking small or no teams and competing with very large groups with the use of AI. Bottom line is I also am widely known for my background in competitive intelligence and that kind of thing. Now, I've dealt in every vertical market over my long career, and one of them that I've dealt with is insurance in some different areas. In this talk, I'll explain my background both in business and AI governance in the insurance industry. By the way, I've certainly dealt with people with financial and analytical apps that I've sold into the insurance industry and also from an infrastructure plan. So I'm quite used to dealing with people from the IT side and from other different sides in the insurance side in terms of what goes on a day-to-day level with business processes. Now, we're going to deal with navigating regulation, innovation and responsibility. And basically speaking, I think the bottom line is that if we take a look at the insurance industry, the bottom line is that there are regulatory landscapes that are coming out all the time, such as those in New York, California, Canada, and the EU. So the bottom line is that there is a wide acceptance now of AI governance frameworks. Even with the current administration, there's still stuff going on. And private and that kind of is a key element. It may or may not be something that's as important in America, except in some states, once again, California and New York and others, New Jersey and others. But bottom line is, it's there. It's a reality. It's something that we have to deal with. And the consequences of not dealing with it could be liability for claims processing, for fairness, inclusion, and for other things like that. You don't want to have redlining in the insurance industry. Synthetic data, which I'll explain as we go along, can be a real boon for that. It helps to do what's called minimization of data. The implications for the insurance sector is that it's not good enough to just say, that's not something we're doing yet. The bottom line is, with or without AI, there are privacy and data issues, and it just multiplies when you're using AI. Just 1 second. There we go. Now, the first thing is, what are the AI use cases in insurance? Well, you're looking at claims automation. So if you go on the way that it's always been done, that's fine, except that it's very expensive and you can get up to 92% less cost by using claims automation using AI. That's important, but there's underwriting issues. You need to do some risk analysis on that to make sure that, basically speaking, again, there are not issues of inclusivity, issues of basically revealing personally identifiable information, PII, and that kind of thing. I will mention that another element to things is fraud detection. With AI, you can find outliers and you can find unusual situations that would be missed by human detection.
Or patterns,
So,
more likely.
or patterns, in other
Yeah.
words, yeah. So as a result, it means that you have a powerful capability to keep things in band and not have like a fraud situation arise as easily. Doesn't mean that it can't arise, just means not as easily. And as things get better and better from the AI side, it'll happen less and less that it gets past the AI. Now, as for customer experience personalization, to have a one-to-one experience for the customer and make sure that they have their special little possibilities with your insurance, things that you're offering them, that kind of things, offers and other things, that can help with sales. So that also too is another issue with AI, and that's another use case. The regulatory landscape we're going to deal with a little bit some of the AI governance frameworks like 42001 from ISO. And we're also going to deal with some of the implications for the insurance sector and some recommendations. I see that I had this slide twice, Richard. California's AI law, the impact on insurance claims automation is this. SB 1047 requires transparency and safety in systems. So to be transparent, to explain to people why you've done different things and give them the ability to withdraw, to opt out. This is now part of the law. And the other side of the coin is that from a safety viewpoint, I know in New York, they're actually holding people to account for algorithms. And I believe there's something similar in the California law. So safety is a big issue. You don't want it hallucinating. You don't want it doing something that it shouldn't be doing or releasing personally identifiable information. Anybody that says, what can you do with personally identifiable information? Netflix, their 700 million person database. Apparently, if you take just two different elements of that, two different fields, and you analyze it, you could find someone's home address inside of 6 minutes. So that'll give you some idea of what you can do with PII. As a result, it's a tremendously important thing to have protections and guardrails in place. The impacts for underwriting, claims processing, and fraud detection of AI are that it's a brave new world. We need to deal with these things or we're gaining liability. In fact, many insurance groups now have a chief AI risk officer who reports back to their risk group. And the issue is that it's so complex, you need somebody in charge who's just got it all in their mind. They know what's going on. A boss, a czar. That is happening today. That's one of the new titles that are coming up. Insurers must ensure explainability as well. Why did you make a certain decision? It could be challenged. There's all kinds of litigious court cases, so especially in America. So that's an issue. And auditability of AI models, being prepared so that if government walks in, that you're prepared to deal with any kind of audit, that kind of thing. You have model cards, you have everything set up and good to go so that they can see what's going on. This is extremely important. In New York, it requires companies in the New York Algorithmic Accountability Act to be able to be ready for an audit for bias and fairness. So are you biased? Are there some groups that are excluded? Are there some groups that gain unfair advantage? And in terms of all that kind of stuff, are you maintaining fairness? Why did you make the decisions that you made? Why did your algorithms make the decisions that they made? This affects your pricing algorithms, your automated customer service bots, for sure. And for sure, in any kind of like special offers, that kind of thing, one-to-one. That's a real issue. Now, the mandate is to document your data sources and your model training methods so that you can show what you've done and how you've done it and why you've done it and when. And make sure that you have a timestamp on all of that. That's really important. By the way, if there's any questions, just to ask anything you want as we go along. In Canada, Bill C-27 of the AI and Data Act, also known as ADA, regulates high impact AI systems under ADA. And there's an actual, there's a chart for that series of levels of AI. You go past a certain point, you're going to be subject to government audit.
Can you talk about what that high impact, give us an example of what would qualify or be under that high impact category?
If you're touching PII, you're already in it.
Okay. Any other situation?
Yeah. If there's a thing that's going to involve a serious amount of money or some kind of impact on an individual's life and situation, all of that kind of stuff will be involved. So anything that has high impact. So for instance, if there's some augmentary, because we have government insurance in Canada, but if there's some kind of augmentary health insurance and a decision is made under the health insurance not to support something, that would be a key issue. You're dealing with something like that, obviously that would be an issue. If there's anything that happens from a legislative point of like judicial, anything in a court proceeding would be incredibly under that level, anything that affects safety, actual physical safety. That would be another thing. So there are plenty of things that occur in industrial circumstances, on construction sites, and other things like that. Is that somewhat helpful, Manny?
Oh, very. Thank you for that qualification. Very helpful.
Yeah, absolutely.
Because there are many different types of insurance, and obviously there's high impact AI systems could touch many, if not all of them.
Well, any or all of them. And the other side of the coin is that it could affect decisions that are being made by them, but it could also affect the storage of data and whether or not it's released, like PII becomes available, or whether or not there's some kind of pollution from some kind of other data, which could happen in a system too. So there's more.
I would think that there would be more AI solutions that would fall under that high impact than not.
Me too.
Probably.
Yeah. What about if these insurance platforms or processes require inbound data from other systems? Would that be covered under that as well? i.e.
Oh, yeah, it would.
medical information for life insurance or health insurance?
Yes. Not the same way that the EU does, where you have like massive fines and you have to have somebody basically be responsible as an actual chief officer for that kind of thing for each of those groups, everybody upstream and downstream. That's the way it works in the EU. In Canada, though, anything that touches the insurance process probably would be subject to not quite the same, but a similar possibility for audit, that kind of thing. And government inspectors could walk in at any time and they could just check things. So as a result, you have to be ready for that. Does that answer your question, Richard?
Yeah.
Cool. Now, basically, insurers must disclose AI use to consumers. So you can't just do it. You've got to be able to say, hey, we are using AI and we're using it in the following ways with your data. And so that has to be done. That's the law. It also creates a framework for AI model assessments and risk classification. So there's a whole framework for this that basically occurs in Canada. It was modeled after the one in the EU, and both of those were modeled after ISO 42001, just for your understanding. Any questions before I move on?
Any distinctions in terms of the U.S. application of this?
You're seeing more of it in New York, New Jersey, and California, and some other states. The bottom line is it's not national yet, but there are things that are being proposed. And even with this administration, there are things that are still being proposed. There's a national AI initiative. I don't know if you knew that.
In the United States?
Yes.
Yeah, there is. But in terms of governance, there doesn't seem to be an appetite for that level of government regulation.
As I was saying earlier, it's a little different in the States. It's not quite the same level of appetite that you see internationally.
Yeah.
So it's different.
Right.
Let's move on. Now, a comparative regulatory snapshot here. California focuses more on safety and developer responsibility. So making sure that there's safety, especially for PII and that kind of thing, and that the developer is the responsible party. In New York, the emphasis is on bias and audits and public reporting, making sure that things are kept fair and equitable. It's very similar to the EU, more risk-based regulation with proactive disclosures. If you disclose proactively, I think there's some legal, I'm not a lawyer, but I believe there's some legal advantage that you gain. In terms of key regulatory themes across jurisdictions, transparency and explainability. So in other words, when you're transparent, making sure that people understand why you made the decisions you did through your algorithms, why you've set it up the way that you have, what it's doing, and you've let them know that you're doing it in the first place. You want to have data minimization. So in other words, the more that you can minimize data, and we'll talk about synthetic data in a second, but the more that you minimize data, the better. It gives less moving parts, less chance to. It's also important to have a hybrid system, human in the loop, something that I personally have a specialty with in different fields. You need human oversight. At a certain point, humans have to take a look and make the call. Are things staying in band? Is everything working? Now, the other thing is the risk-based government model used in the EU and Canada seem to be things that from an international perspective are widely used. And again, ISO 42001 is something that set the gold standard for that. So that's what that's all about. In America, you have the National AI Initiative Act. Again, there's not as much appetite for regulation as there is in other countries. NIST has an AI risk management framework, though. And again, there's a proposed Algorithmic Accountability Act right now. Bottom line is, I just thought I'd bring that up. The role of synthetic data in insurance. Now, basically, what synthetic data is this. If you take, remember I mentioned the database from Netflix earlier? If you take that database and you do what's called redacting, or in other words, you just hide different fields, you can still find information very easily. Again, 2 minutes for just having two fields inside of a 700 million person database. On the other hand, if you don't redact and you use synthetic data, you're much safer. Synthetic data means that you take the original data, maybe several years of it, 5 or 10 years, whatever, which insurance companies definitely have. They have it in spades. And then take that, and then basically speaking, take a look at the distribution of the data, distribution of information in the data. And then you create new data based on it, which is not copying the data. It is information that looks very similar to the data, but it is ersatz, or in other words, fake data. That's what synthetic data is. Now, if you have, say, 5 to 10 years, you could project 10 or 20 years into the future. So it means that you can now project safely with a model that does not need to use PII. So it enables model training without PII exposure. This is really powerful. The other thing, too, is that if your synthetic data is really accurate, you can simulate rare scenarios. So stuff that wouldn't occur within 10 or 15 years, 20 years, you can actually project it and begin to take a look at what are the key predictor variables that would cause such a thing to arise. That's very powerful. That gives you a predictive capability to see that if certain elements of negative scenario occur, that basically speaking, just not even having the full elements, but having just one or two issues of it, you can wind up being able to predict what's going on very quickly. Now, this reduces regulatory risk as well. So what this means is that when you have regulators come in, can show them all the areas where you don't have PII. And that just bolsters your whole audit in the first place. So that's a really great thing. Now, in terms of AI ethics in insurance underwriting, you need to avoid bias in risk models. You need to ensure fairness in pricing. So when you're avoiding bias, what you're doing is you're preventing what's called redlining, or in other words, excluding perhaps whole ethnic groups from being able to avail themselves of different kinds of insurance. This is something that throughout the entire financial industry has been a really negative thing in history. So avoiding bias, really powerfully useful. Ensuring
But doesn't this open up potentially a can of worms, Alan? Because obviously the insurance industry is heavily regulated, but we know bias exists from a
so does
practical
the banking
standpoint.
industry. In the banking industry, it does as well.
This would appear to shine, yes, right. This would appear to shine a light on that, such that if they were required to file reports based on this AI generation, it could lead to legal action. I'm thinking
Well,
more
yes.
in the way that underwriting is done more on the healthcare space that we learned, like from the unfortunate incident where the chairman of U.S. healthcare was assassinated, to find out
Yeah.
that 30% of their 30% of their overall filings for medical insurance coverage are denied on one thing or another. And almost like an AI black box, you don't really know what the valid cause and reason is. And it tends to be
Explainability. Yeah.
It tends to be from people who unfortunately can't represent themselves when these kinds of things happen. So this has, I think, an overarching, can be, I don't want to say an overarching threat to the industry, but it can really create some momentum towards leveling the playing field against those that are insured versus
Well,
insured.
to your point, let me go into that for a second. The bottom line is you could say, okay, we're not going to have AI in our insurance company. Now, if you say that doesn't work, let me tell you why it doesn't work. Currently, I'm writing a book on the fifth industrial revolution, and the first three were to do with energy, and the fourth was to do digital transformation, just getting data into computers, even if you manually dealt with it. In the fifth industrial revolution, you're real time, you are reducing risk, you are holistic, and you are touching every business process and every part of every business process. If you're not doing that, and you have an IR, like Industrial Revolution 4 company that doesn't have AI coming up against an IR 5 company, they'll eat their lunch.
Yeah.
They'll clean the clock.
Yeah, where I see this really having an impact is someone out there will embrace this wholeheartedly, some
Right.
insurer. And then we all know that there are rating systems similar to Yelp for insurance
Oh,
companies,
it's an
insurance
arms race.
coverages. Yeah.
Absolute arms race, Richard. And the other side of the coin is, though, why did I bring up what I brought up? The thing is, you're mentioning that it shines a light. Well, in the banking industry, which is also heavily regulated, by the way, the financial industry is more regulated than any industry, including healthcare and like weapons. So the bottom line is, it occurred in the banking industry for years. They were doing redlining. They were excluding people in different areas. And some people claim that they're still doing that today.
Yeah.
So the thing is, with the insurance industry, you can't back off of AI. You'll be in like an Industrial Revolution 4, like an IR4 kind of company.
Yeah.
You won't win. And as you say with
Right.
Yelp,
Yeah.
it's
Plus,
not just,
you won't be competitive, to your
it
point.
won't be
Because
in any way, shape, or form. So here's the bottom line. You need to avoid bias in risk models. You need to ensure fairness in pricing. There's no way around it. Avoiding AI is basically avoiding the current reality. And regulatory pressure to explain decisions is palpable, even with the current administration. So it's something that you really have to look into. Now, in terms of classifying models by risk, it's low to high. They apply a tiered, any of these government sources apply a tiered oversight methodology. So you focus on anything that has a higher impact. The more it involves safety or PII, the more it involves fairness or something that needs explainability. That's what makes it high impact. So it's not just one thing, it's all kinds of things that can make it that way. It's a complex issue. I hope that answers your question from before, Manning. 1 second. There we go. In terms of how do we deal with incident response for AI systems, we have to establish escalation protocols before they happen. Make sure that we know what are we going to do, when, where, and how. We have to monitor for anomalies and make sure that we know that if something, maybe we've used that synthetic data, we see all those negative, outlying scenarios. If we see that one's coming up, have it recognized by the AI and fix it so that basically we can deal with it head on and quickly and basically minimize the effects. We want to maintain as well logs for regulators so that when they see what's gone on, they have a way of knowing with timestamps exactly what's gone on.
And is there an ROI to the insurance industry for adopting AI governance frameworks? Does it diminish the possibility for lawsuits or rogue behavior that can lead to lawsuits and those kinds of things?
Again, I'm not a lawyer, but logically speaking, if you do things the right way from a best practice plan, and you're using something like ISO 42001, that kind of thing, or OECD AI principles, or NIST RMF, which had a lot of uptake in the private sector, it couldn't hurt, Richard, not at all. The thing is, when you get your ducks in a row and you're challenged, it just means you have a better capability to deal with negative situations, doesn't it? So I hope that's an answer to your question. What are your thoughts on that?
Yeah, I agree. I think that anytime there are guidelines or but there has to be some way to enforce it. And you can have ISO guidelines, but if the company just has it listed on their website and they're not following it, which happens a lot because they just want it out there and people to see, oh, we're following, right? And internally, they either don't have somebody that knows enough about it to make sure the company is in compliance, or they just don't care.
That's why many companies, exactly. Are bringing in a chief AI risk officer who reports back to the risk management company, insurance company.
What it's going to wind up being is that insurance companies are probably going to do something more. If you have these standards for governance and you can show us that you have somebody in-house that's enforcing, then we'll give you a discount.
We'll give you we'll give you a certification, which is another item that qualifies as a
for a lesser cost.
vendor. Right.
Yeah, lesser cost. Now, the other thing is, I think Richard and Chris have been doing some research on this very kind of issue. Richard, do you want to talk about that for a second?
One of the things that we looked at a month or so back is what we discovered is that states, and fortunately, the Senate vetoed this provision that the federal government wanted to enforce on the states that they could not write their own AI governance laws on the books. So fortunately, that dispelled about a week or so ago when the bill passed on July 4th, I believe it was, because some states obviously have already enacted AI governance laws in place. And even the state insurance departments were beginning to look at how to underwrite AI governance in insurance policies, similar to how basically your liability insurance policies, if you're an incorporation or a business, you would have a cybersecurity rider that would protect and offer you insurance against those kinds of attacks. Similarly, I think the insurance industry was beginning to look at how to underwrite AI governance as part of an insurance package that would be incorporated into the liability portfolio of insurance. Chris and I did some investigation. New York is moving in that direction. The incredibly hot, arguably the most highly regulated insurance state in the entire union. Pennsylvania is doing this. So a number of states have already starting to move in this direction, which speaks to my earlier point about if you do have this insurance as a business, that's really good for you because it demonstrates to your customers that you've taken, of course, in order to get this kind of insurance, you would have to put things in place. What you were explaining, Alan, either with ISO or NIST standards, or to your earlier point, having someone in-house who is tasked with the enforcement of AI governance in place as a prerequisite for being able to get this policy approved. And again, similar to cybersecurity. You can't get the cybersecurity rider, of course, unless you have some things in place that demonstrate to the insurance company that you meet a certain litmus test or a certain standard. So that's what the concern.
In Canada, just as a point, many companies don't know this, but if you don't maintain cybersecurity, you could be running afoul of federal law. So as a result, it's going to be the same thing with AI. You don't want to run afoul of federal law, especially with AIDA. So bottom line is, as you say, having both the systems and a management, a human infrastructure in place to deal with these kinds of things, critically important.
Yeah.
So what does the federal law look like in Canada as far as AI? Because we don't really have anything here in the US for that, right?
No, we don't.
Well, I'll tell you, I was certainly happy and relieved. It doesn't stop you from creating AI. It's not like you have to have a government license or something like that to create AI. I run an AI company, so I understand that. But what it does do is it certainly prevents outliers. And if somebody's doing something with AI that is a little bit wrong, they will be picked up pretty quick, and there will be audits by the federal government. And they have the power of enforcement to bring in really heavy fines.
So maybe that's a starting point for us here in the US, just to not the hammer approach.
No.
Like that, that might be a good starting point because Canada's already doing something, and for whatever reason, wrong agreement or disagreement, I guess the majority of the people wanted it. Otherwise, it wouldn't have passed. It wouldn't have been.
Well, I'll put it to you this way. It's a little bit like the EU light. So we're very similar to America in terms of wanting to have not too much regulation, but we need enough that we've got some guardrails and we can prevent humans from doing some really bad things. AI doesn't initiate things in the current implementations, but by the same token, humans do. So you have to be ready, and especially in the insurance industry, once again, so heavily regulated. You need to establish your escalation protocols. You need to monitor for anomalies, and you need to maintain law for regulators, but it's not enough. You need to have somebody in charge who basically can deal with the risk.
Let me ask you this, though. Go ahead, Manny, if you have a column.
Manny, if you want to.
So Richard and Chris, are we looking at what Canada has done to use that as like a kind of
benchmark?
split or just
Haven't, but I think we should.
Yeah.
We've been looking at it from what the individual states have done, because again, on a federal level, to your point, there are no federal laws at this point that we're aware of in terms of enforcing AI governance and so forth. But again, insurance being such a highly regulated industry and being statewide, state to state, it's incumbent upon each state's insurance department to come up, I guess, with their own standards. But that brings up a question. What do you do about international corporations that operate in all states and even internationally? How is AI governance from in the insurance industry, rather? How is
And can you regulate them?
And the way it works now is each insurance companies have to register with each individual state in order to operate. For example,
Right.
there are some insurance companies I know of that don't operate in New York State because it's just too onerous in terms of how they operate. So because
you have to start somewhere. You have to start somewhere. You know what I mean? I don't know if this is what's going on behind the scenes. To me, it seems like we're still testing out the waters. We're trying to see what the states are doing. At the heart of it, we have to come up with something. And if we look at some states and what they're doing, and then maybe another state that's not doing it, and then we eliminate it based on the fact that there are more states that don't than do, then we're never going to get off the ground. We need to have something, put things on the list and then see what takes.
There's a point that neither of you have brought up, and you see this in Canada. When we brought in the AIDA, does the AIDA have minutiae detail for
What
every
is
single?
AIDA?
That's the AI Data Act. Does it provide you with enough information that you have to go by certain regulations for everything? No. And in fact, one of the things that people were saying when it first came in, they're not saying it so much now, was they were avoiding Canada at first because they were nervous. There were no regulations. And basically it provided a regulatory framework, but it left it up to civil servants to create the actual regulations. So the bottom line is it's actually worked not like that and not as bad as that. There's not so much regulation, but there are guardrails. Perhaps what you need to do is just set up enough of a framework that the government could do what it needs to do, but not necessarily do it, and not necessarily do it unless there are reasons why you have to do it.
But I think what Manny was referring to is, should we start, from at least a menu, if you will, of
Yes.
standardized requirements? The states can choose to modify based on their own individual needs, but there should be a set of baseline standards in AI governance in the insurance industry to start with. That's
Let
what
me ask you a question. If you're driving a car, it doesn't tell you everything you're going to do while you drive, but there's definitely a few rules, just the rules of the road. And basically speaking, one of them is you don't drive on the sidewalk. Now, if you have an insurance company and you're talking about protecting PII, maybe just a few rules, keeping things that are in band, but not enough that they can't do business. Well, explaining to the either. Yeah.
And one example to expand upon that is certain states now have, if you're driving on a highway and there's a police car that's assisting the driver or giving them a ticket, that you have to slide over to the next lane or you could be ticketed.
Right.
That may not be in place in all 50 states, but that might be written into the policy on which states, that applies to. So there could be insurance laws.
Well, coming back to a point that you said earlier, Richard, that implies that if you are a vendor and because of something that you've done, even though the company had done all the right things, all the right audits in place and everything all set up right, and they've got a chief AI risk officer and all that kind of stuff, and you're a vendor that opens them up, we haven't seen the court cases yet, but I could imagine something that could be like just brutal. Take a company out totally. So supplying the insurance companies with software will be a critically important thing because now you also downstream have to be like that. Same way they have CMMI. Take a look from the military side at everybody like a subcontractor. Well, it's the same thing with insurance, with innovative technologies.
Absolutely. Yeah. And in the airline industry too, because they were talking about pilots were saying in an airplane that their autopilots are vulnerable, to hackers essentially.
It opened something up from a cyber level. Yeah. Sure.
Yeah. And of course, AI provides you with just an incredible scalability of bombarding the rogue communications that could be used in various ways, i.e., in interrogating an airline autopilot system to crash the plane, God forbid.
Or turning around and having not a hacker, but the system itself say, because of X, I don't feel like flying today.
Or
So nice, let's did it.
Or we're going to take a detour to Cuba.
Yeah, we're going to take a
Just so
detour
you
to the South
know-
Pole. Yes.
So just let you know, all the computer systems on a passenger plane have no connection outside of that plane. There's no connection to the outside world, no internet
Even
connection. The only
GPS?
connection that plane has is radio. Okay. And the internet connection that passengers can access on that plane, that is firewalled off.
Yeah.
You can't to any
Can I
of the
just
flights
ask
or
a
anything.
question?
Yeah, you can't get to any of the avionics or
That's
any
good.
of that stuff
That's
on a
good. No,
passenger.
that's the way it should be. But can I just ask one
It
quick
is.
question? If it uses GPS, and of course, many,
That's what they were talking about too. Yeah, GPS.
yeah, and somebody from a foreign entity turns around and does something to a satellite, not to destroy it, but to make the GPS wonky. Is that a vulnerability?
It is to a certain extent. So I'm a big plane, whatever. It's like I have a pilot license, but I'm really deep into that stuff. So the flight navigation that uses the GPS. So what happens is they use these waypoints that are like highways in the air that are designated and defined.
The
The
ley
pilots
line.
don't make up their own path. They're like, okay, we're getting from here to here. These are the 3 waypoints we have to follow to get there.
And autopilot, of course, is programmed programmatically to do,
So
you know.
they can see on their digital display in a visual format, not text, where they're going. Okay. They can see the destination. Let's say they're going to Chicago. They can see that they're on their way to Chicago. Okay.
Right.
Now, let's say somebody hacks the GPS and says, okay, you know what? We're going to detour you. They're going to see that. Okay. They're going to see that.
Right.
Now, the GPS doesn't really do anything for them as pilots as far as altitude. That's all done by the avionics internal instrumentation. Okay. So it's all done through, So it's all localized equipment.
Still make them fly until they run out of fuel.
So there's no, I mean, there really isn't a way to, they're pretty careful because they're very paranoid, that industry, about getting hacked.
Yes.
But there's this
And rightly so. Rightly so.
Yeah.
If you saw the first Die Hard,
and crashing it into a mountain or a building or something.
Oh, that's exactly
Die
what we're
Hard
thinking.
movie,
Yeah.
Yeah.
Yeah,
And those pilots, even though they have automation, they're monitored, even though the plane might be flying itself, quote unquote itself, they're still monitoring everything. And there's proximity alerts. And even if 2 planes are getting ready to close in on each other, there's equipment where both planes will be notified. And this is independent of air traffic control. And it'll tell one plane to climb and the other one to dive. So it avoids the collision. There's all sorts of stuff that is.
It's good. That's really good to know, Manny, because now I don't have any fear of flying, to quote the Erica Zhang book, as a consequence of lack of AI governance. So it's a closed system, not in purpose.
No, it's totally
And the insurance industry can rest easy that basically speaking, they'll have less claims as a result.
A nice segue, Alan. Back to you.
Segue.
Wonderful
Back to where we
presentation.
are.
Yeah.
Back to where we are. So basically speaking, let's just move on. So what are the trends? One trend is ISO IEC 42001. This is what the EU used, what Canada used. It certainly played a role both in California and in New York. So basically speaking, it is an important standard and something that any insurance company should be looking into. OECD AI principles and NIST RMF principles, basically speaking, something that should be as well looked into by those involved in that side of things. To future-proof your governance, what you need to do is have modular, adaptable compliance systems. systems that can be applied to more than one system. And you need to have AI ops for ongoing model validation. People think that because they put in AI, that basically they're done. They're not done. You need to update your models constantly to keep them in sync with reality. And the other thing is you need to continually upskill your workforce. Those that think you put in AI and you can just get rid of people are probably going to be companies that, from a competitive range, will lose. Other folks that understand that you empower people and that it's a hybrid model and that you could take somebody who previously could do only certain functions and now assist them to get to a much higher level, more powerful level with more creativity being used. That's what you use AI for.
So one of the things that is happening so my daughter's 21, she's looking for work. And one of the things that she and her friends are finding out is that, and this is more the low level jobs, like the entry level jobs or
Entry level, yeah.
or the ones that where you bring somebody in, even maybe as a permanent whatever, and they're just there to file. Those jobs are going away. They're already going away because
Absolutely. Yeah. And this is why it's really good to understand AI, to understand it in this specific industry, and to understand basically areas where you could serve. There are new jobs that are coming up too. And basically you need training for that. So that is a constant and continual thing. And what's beginning to happen, certainly from the side of tech, and not as much yet from insurance, but it'll come, is that they're actually training people and people are being brought in and getting certifications so that they can move on and be employable. And that's inevitable. That'll happen as well in insurance. So basically speaking, there you go. So we need to perform a current state audit, align your teams on governance goals, and pilot new oversight tools now. And if we can do that, you can basically maybe stay ahead. Again, you're going to need somebody in charge, a chief AI risk officer, who basically can keep everything, have a vision for all of this.
I guess there's an overarching question, Alan.
Yeah.
And that is this going to be like Sarbanes-Oxley, where there's a mandatory component necessary for anyone in the accounting or financial business industry to deploy? Because I think if this is optional, as we said earlier, because there's no doubt a cost associated to this, because consulting companies will be all over this, putting together these kinds of programs, again, using Sarbanes-Oxley as the reference point, that they may choose to, for cost purposes, opt out of, because insurance companies are all about cost censuses of human beings and how that translates to costs, and their costing modeling is very similar to the banking industry. And this will be perceived as overhead costs, and unless there's a law mandating this, many of them may choose to opt out. What are your thoughts on that?
To your point, until SOX came in, basically speaking, a lot of the things that occur with SOX weren't things that companies did. When it came in, suddenly they were doing it. There's a change in the firmament, so to speak. This occurs. Reminds me of when they first had in the automotive industry, which is a slightly different one. I don't want to get off into a whole tangent here, but when they started to stop doing their own accounting and making all the tiers do the accounting for them, it was a big shock. And they give people like 30 days or they didn't get any money. So,
but to Manny's earlier point, where he said that organizations will eventually figure out ways to circumvent or downplay the requirement and check the minuscule boxes, as it were.
Compliance is always an issue. Yeah, always an issue. The other side of the coin is, though, regulation is not a static thing. Now, if it's not important today and they're saying with the current administration, it doesn't seem we have an appetite for this. What if there's a big change in 2026 or 2028? Not doing these things and not being ready, that's not an option. They have responsibility to their shareholders to deal with that, and also to the people that they serve, their constituents. Bottom line is there's no way to avoid it. AI is the reality. The bottom line is you need to be ready. It's just that level.
Interesting in contrast to if we all dial back to 2007, 2008.
Wow.
The industry knew what it was doing. There would be a veritable pin in the balloon, so to speak. The mortgage-backed securities, the repurposing of them, the reselling of them, the lack of transparency. They knew what they were doing, and they knew that at some point there would be an implosion. it's too late, frankly, to wait for a cataclysmic activity like that to proceed with this kind of. But I think AI is the game changer. Back then, there was no AI. There was AI is capable, I think, because it's data driven, because it can be non-biased. Obviously, if it's programmed that way to look at the underlying data and to provide the auditing capability and those kinds of things, that AI will force companies, I think, to be more proactive, because the evidence of any misbehavior that could lead to a cataclysmic event like we had with the mortgage-backed security debacle will be all over the place
Well, the other side of the coin is
and
what
hopefully
you've
visible.
what you've said is actually prescient, and let me tell you why. Because the very example that you've used, there could be things that involve AI and personally identifiable information that people find ways around. Absolutely. And then what happens is this goes on for a long period of time, and suddenly there is a sudden and immediate change in the firmament, and then all of a sudden they're not ready for it. So caveat emptor, buyer beware. If what you're buying into is that not dealing with from the AI side with compliance is the way you want to go, it might work today, but it's going to work tomorrow, and it's going to future proof you. Is it going to keep you in line, and is it going to keep you successful and competitive and able to deal with the things that you deal with today? Anyway, that's my presentation. I'm just going to throw it open. Are there any other questions? Anybody?
I think just before I let Maddie jump in, just to complete that thought, if we recall, the accounting firms were implicit with some of those bad agents during the mortgage-backed security analysis.
Yeah,
We all know
they
what
would.
happened to Anderson. We know what happened with Enron and those kinds of things as well. AI
Yes.
is the great differentiator, because if it's there, it's going to be very difficult for that information to be buried, for it not to hopefully be available to point out these things as they're happening, hopefully before they happen. And any organization that knows willingly that this is about to occur and continues down that path, in spite of the irrefutable information from the AI analysis, governance, and auditing, that's a little bit different than what we were looking at back with Enron and with the mortgage-backed securities crisis, don't you think?
I would certainly hasten that everybody should search out any of my articles on the fifth industrial revolution on either Medium or on LinkedIn, because basically I've written about this exact kind of topic. When you shine a light, you can't hide things. And what it means in very simple terms is that you do not have the same operational environment anymore. You cannot get away with the things that you got away with before. The minute you start to shine a light, and that's what AI does, it shines a light on things. The minute you shine a light, you change basically the operating procedures for everybody. So it means that you can't get away with hiding things. People can understand what's going on with you. You go on and do that with your competitors or customers or whatever, but they can do it to you. So you need to be prepared to deal with an environment where everything's out in the open. That is a totally different way of doing business. And this is going to take some really change of headspace for a lot of companies, especially in the insurance field.
And when you see things like the head of an organization being snagged at a kiss cam, I always shake my head. It's like, what are you thinking? In a world where there are cameras and facial recognition software and the ability to read emails, any kind of non-structured data can be used to depose you. And yet people still act as if it was 30 years ago, where they can get away with anything. It just boggles the mind.
That is a really cold play.
Any last words, Manny?
No, a good presentation, good discussion as always. I just think we need to pull the trigger and actually start looking at guidelines that maybe at Canada, and because they've already
good point,
vetted a lot of issues. The one thing I wanted to keep in mind about insurance companies is insurance companies are not there to protect us. They're there to make money. Okay. Period. So everything that they're going to do is going to be about their bottom line. It's going to be about making money. Right. So either that's going to be like disqualifying people for insurance, or, higher rates for some people based on whatever their AI profile is, whatever it is. So I think that
Yeah.
it should be something in what we're doing that even puts guardrails on that.
It's
Right, 'cause,
pricey to do the wrong stuff, isn't it?
you know, the
What did you
links,
say, Alan?
I said it's pricey to do the wrong stuff.
Yeah,
It's expensive to do the
let's
wrong
use their
thing.
own devices. Insurance companies are going to be like, "Oh, you want to insure you? It's going to cost you $1 million a year." We're like,
Oh, there's this. Sorry about that, Richard. I just want to say there's a saying by a former colleague of mine that he used to always say, and I do agree with him. When you mess around in business, you just lose money.
"Okay,
Same here. Same thing with compliance. When you mess around with compliance, you just lose money. It's just wasting time and losing money. It's not being efficient for yourself, for your company, for your shareholders, and for your customers. And the bottom line is, when you shine that light, there's a lot that you see.
right. The only fear is that if this has an impact at reducing profitability for the insurance industry, then to Manny's point, they could just increase the rates on insurance policies and
Right.
basically pass on that additional cost to the consumer. We know that's capitalism, the way it operates.
Whether
Still,
it's it or whether it's an insurance company, they will always find a way to profit.
but would you pay a higher premium for insurance, knowing that there's no bias, knowing that if you have a legitimate claim, it will be paid and not denied by some process that arbitrarily says, nope, that's a consideration.
Would I personally pay for fairness and equity? Probably, yeah.
Yeah. Even though those are elements that, from many of our perspectives, should be inherent in any kind of process. We shouldn't have to pay for honesty and truth and, do what is factual. But
You shouldn't have to pay extra for organic, healthy foods, but it does cost extra.
Yeah.
And people pay that premium because they want to make sure that they're healthy. So same thing with insurance. If you pay for fairness and equitability, why not just make sure that it's not so much that it's above a certain line? I once knew a fellow from Britain who turned to me. I said to him, "You have hundreds of products." He sold technology products. And I said, "How do you price them?" And he said, "I go to somebody and I give him a price. And if he buys what I'm selling on a small software product, then I basically say, thank you. And I go on to the next person. And the next guy, I raise it by $5. And the next guy, $5. And the next guy, $5 till somebody says, what? Forget it. And then I know what my ceiling is. I know my price. And, the bottom line is I'm sure that on a one-to-one level, with all the capabilities we have with digital marketing today, insurance companies will be doing not something so different. Levels will be established. It's just a change in how people operate. Not DevOps, it's insurance ops. That's what it really is. I think there'll be a reckoning, as you're saying, Richard, but I don't think that there'll be a lack of fairness that would be ongoing, because somebody will come around and they'll say, you want to buy something fair? And then they'll gain a competitive advantage.
Well, one of the things I think is going to happen in the insurance industry is that until they have actual
Standards?
cases where companies are filing claims, AI claims, they're not going to know how much to charge. So, to give you an example, a long time ago, I got a long-term care insurance, and it was when it first came out, and nobody knew what the claims were going to look like, right? After they figured it out, the rates for new policies skyrocketed. And even though I bought mine way before any of that happened, so mine's with New York Life, and New York Life went to each state and said, hey, we want to raise the rates. And the state basically said, they dictated what that increase was going to be and over what amount of time. So I pay my premium every 6 months, and for 2 years, so 4 payments, my rates went up. But other terms of the rate didn't change. Like I have a lifetime, whatever. There's no limit versus other people. It's like from the day you buy, it's only good for 10 years.
Yeah.
So I think that we can expect something similar could happen. And so maybe there's something that needs to be put into place not retro, but proactively to basically say, hey, we know the rates could go up because you don't know what the claims are, without actually saying that, but actually saying to them, hey, you cannot raise a company's rates more than X% a year.
That's the fairness factor, and that's the explainability factor again. By the way, we're at 2:12. We're a little bit past our original mandate. What I would suggest is, please, Manny, by all means, get in touch with me or with Richard or Chris at any time. If you have any questions about anything, we're always here to help. And I want to thank you for joining us today. I want to thank anybody that's seeing this by recording for joining us today. And I think the bottom line is we can go on. There's lots of very interesting little tidbits that came out at the end there. I really was very grateful for that, by the way, guys.
Good job.
Without further ado, thank you very much. Thank you. So thank you for coming. And I hope this has been of some help.
And we'll see everybody next week at 6 p.m. for our next roundtable. We'll be sending out invites for that. So thanks again for coming on behalf of Cognify. Thank you, Alan.
And Richard,
Hey,
what's the topic for next week?
Let's see if I have that handy. I may not have it, sorry, but it'll be within the AI governance space. So we'll be sending out a notice on it.
God bless. Thank you, guys.
Thanks, everyone. Take care. Have
Hey,
a
guys.
blessed day.
Bye.
Great day. A pleasure.